Hey, good morning, folks. I'm Byron. I work at Blockstream on the Liquid network, and I'm here today to tell you why I believe it's a good thing for Bitcoin that the Liquid network is around and helping to scale Bitcoin, and the other way is that it's also beneficial to Bitcoin. Well, this was working a second ago. There we go. Quick, just a bit about me. I had studied computer science 20 years ago, which now makes me feel very old, working as a software developer in a number of different industries before starting to work for Blockstream in 2022. I got hired on the Liquid team after Blockstream raised their Series B funding round, and I mostly work on Rust and C++ code and Linux DevOps type of stuff. And a bit about my Bitcoin journey is that I had heard about it as far back as 2012 and did not get into it because I read comments on Hacker News about why it would never work. And all the types of FUD you still see today, I was reading back then and wrote it off completely in 2012. About 5 years later, I FOMO'd in because it was on the 2017 bull run, and as soon as it crashed in 2018, I quickly sold everything at a loss because I did not think it was going anywhere, and I was like, I just want my rands back. Fast forward a bit to 2020, and you start to learn a bit more about what money is, and you see a couple of cycles of the ups and downs, higher highs, higher lows, and once you start to have a real sense of curiosity about Bitcoin, then you understand why it's a better money and why it can't be stopped and why the fixed supply will lead to number go up, as we all love. But what we also need is freedom go up, because without that, number go up will be captured and taken over by interests that already control the financial system. So that's my long-winded way of saying I got in very late. But you always feel too late to Bitcoin. You always think it's too expensive. And all you have to do is spend less than you earn and save your money in Bitcoin for the long term. I guess this thing is not working, blessing? Oh, there we go. All right. A little bit about Blockstream. It was founded back in 2014 by Adam Back and GMax and Sipa, some names from Bitcoin development you may recognize. So it's quite a legendary company, in my opinion. And their primary focus is to build the financial infrastructure of the future on Bitcoin to reduce trust and improve verifiability. One of the primary ways to do that is they work on scaling solutions. They've been very involved in the Lightning specifications since the Lightning white paper, and the Liquid network is a complementary but different scaling mechanism for Bitcoin that works as a sidechain to Bitcoin. They also are very interested and working on Bitcoin finance related topics. They've just released 3 new funds that are coming out this year. And on Liquid we have stable coins, there's all kinds of securities, there's bonds. Promissory notes from Mexico is a really huge industry that is now using Liquid. And there's central and decentralized exchanges, trustless lending. There's a number of financial instruments that are being developed on Bitcoin through Liquid. Now, Blockstream has a number of projects and teams and efforts in the Bitcoin ecosystem. The Blockstream research team is one of the premier cryptography research teams advancing the state of Bitcoin cryptography. You may know of Green Wallet, which is a software wallet. It can be paired with a hardware device like the Blockstream Jade, and the Blockstream Jade Plus has just come out now in January, so please check that at the shop. I believe it's free shipping internationally now. Definitely worth checking out. And way back, Blockstream even started to get the Bitcoin time chain broadcast via satellite. So if you have a satellite kit, a software radio, you can get the Bitcoin time chain anywhere you need to across Africa, wherever it may be. Obviously, the Blockstream.info block explorer is quite popular. A lot of open source projects are using that for all their lookups, for their wallets, for that kind of stuff. And believe it or not, Blockstream is also involved in mining hardware and co-location of mining devices. So they really are a full stack Bitcoin company. As you can see here, there's everything right from the protocol on the bottom layer, and we've got liquid, mining, satellite, elements, lightning, simplicity, and then hardware devices. It's quite comprehensive. So large aspirations, and I think they're doing a fantastic job. All right. Here's some history about the Liquid network. As far back as 2014, it was actually proposed in a white paper. This defined how a pegged sidechain like Liquid would work. There was a prototype developed in 2015, and in software development, you sometimes need to build a first version to truly understand the scope of the problems and to solve them all in a production-ready way. And that means that the Liquid network was officially launched in 2018, and it's been running very reliably since then. So we're going on 7 years. And back in 2021, there was a hard fork in the Liquid network, because prior to that, the set of signers for the network was strictly defined and couldn't be changed. And this hard fork enabled the Liquid Federation to be able to change the signing set of the functionary operators when necessary. Because as you may know, sometimes someone may lose their keys or they're inaccessible, and it's a problem if you have a multi-sig where you need someone to be able to replace that signer in the set. The Liquid Federation is made up of a huge number of companies. I believe it's over 70 now. And they run the gamut from wallets and infrastructure, securities, exchanges. As you can see here, there's a very wide range of companies that have an interest in keeping the Liquid network safe and secure. They use it for their daily operations. They use it for payments. They use it for finance. So the Liquid network is run by this federation of companies, which is made up of 3 different boards. There's a technology board, an oversight board, and a membership board. And between them, they decide who joins the Liquid network, and they decide on the technology roadmap for what should be next for the Liquid network. So a little bit how it works. It's a side chain to the Bitcoin chain, and it's owned and operated by this federation of 70 members. They are all around the world, not in any one jurisdiction, and the technology board of the Liquid Federation decides what the roadmap is, what features they should be working on, and what's coming up next for the Liquid network. Now, out of those 70 companies, 15 of them are the ones who are actually running the servers and hardware security modules that advance the Liquid chain and sign any transactions to peg out Liquid Bitcoin to the Bitcoin network. So these 15 operators are also around the world, many different jurisdictions. They are running the servers, and Blockstream is just the company responsible for writing the software and assisting those operators with any updates to the network. So Blockstream can't do anything unilaterally to the Liquid network. It has to start from the federation and be authorized by them. Blockstream then writes the software to assist them and helps them to deploy any updates to the network, which requires the operator to approve it and run the new software on their server. As I mentioned, there are hardware security modules. So the keys that are used for the signing of the blocks and the Federation wallet are not even on the server. They're connected to a separate hardware security module, which has enough of the Bitcoin and Liquid headers and information to verify that what they're signing is actually legitimate. And this is a great security feature, because it means that even if some entity could compromise the server itself from the network side, they can't actually get to the keys that are in the hardware security module. So it's a lot like you or I having a hardware wallet to keep our keys safe from the hot computer. The Liquid network has been extremely secure and reliable, There have been no hacks, no funds stolen, no transactions censored, and with greater than 99.8% uptime for going on 7 years. So it's been extremely reliable. Now, I don't know if you may have heard when people are disparaging Liquid, they'll say it's just a multi-sig. But that really sort of underplays a lot of what's going on behind the scenes. Like, yes, it's a multi-sig, but it's not your 2 of 3 that your auntie and uncle are running. It's an 11 of 15 multi-sig from companies in multiple jurisdictions around the world. So if you wanted to compromise 5 of them to stop blocks from being created, you'd need to be in 5 different countries running 5 different Ocean's 11 style gambits to stop the blocks from occurring. And as soon as that kind of action were noticed, the Federation would start rotating out those members. They would say, okay, this member is compromised, they're not producing blocks anymore, we need to migrate to a newer signing set. So there's a lot of security there. And now you would need 11 of those members around the world, all acting in collusion to steal any funds that are in the Liquid network. So the probabilities are extremely unlikely, especially because of the time it would take and the safeguards that are in place to protect that from happening. Now, it's not just a multi-sig. There are also time-locked emergency keys, which is a different multi-sig that are only available after 4,032 blocks have passed. That's 4,032 Bitcoin blocks, which is about 40,000 Liquid blocks. Now, those keys have never been used, and what that means is that those 15 functioning operators, when any coins in the network are coming up to the time lock, they need to be swept to a new output so that they can't be spent by the emergency keys, right? So you have this thing going on in the background where economical UTXOs that the Federation controls must be refreshed from time to time so that the time lock remains active. Even further to security is that only PAC holders can withdraw from the Federation wallet. A PAC is a peg-out authorization key, which is only available to Liquid members in the Federation that apply for it, and these keys can also be invalidated should one of them be compromised in any way. But it's never happened. More likely is that someone's going to lose their PAC, and then it gets rotated out and they will request a new one. So not only do you have these safeguards, you also have this authorization mechanism, which is sort of a last line of defense against any funds being stolen from the Liquid Federation. And on top of that, the set of signers can be changed through the dynamic federations process, which means that should one of your signers not be able to produce blocks anymore or sign transactions, they can start the process, which normally takes about 2 weeks. The other 14 or however many signers are online define who the new signing set is, and if, I forget the exact figure, it's probably 80% of the blocks in that epoch, if they all agree on who the new signing set is, then after that 2-week period, those new signers are available and keeping the Liquid network going. So yeah, onto the actual topic of my talk, which is Liquid is good for Bitcoin. The first way I believe it's good for Bitcoin is in terms of scaling Bitcoin. As you may know, back in 2017, there was a very big disagreement on whether the size of blocks on Bitcoin should be increased or not. And the market decided that smaller blocks are better for decentralization, which is what we want for Bitcoin. And that means in order to scale Bitcoin, we need to do so in different layers above Bitcoin. And the easiest way to do that is by making many off-chain transactions that are then anchored against the Bitcoin time chain. Lightning works in a similar way, albeit different, where you have these channels between two parties, and they only actually settle onto the Bitcoin chain once they're closed. So you do have a transaction for opening that Lightning channel, and the state of that transaction is updated many times throughout its lifetime as funds flow back and forth between the two parties before it's closed and that transaction is confirmed on the Bitcoin chain. So that's how Lightning scales Bitcoin. Liquid works slightly differently, by running a sidechain, you can lock up your Bitcoin on the main chain by sending it to the Federation. It's a process we call pegging in. And then you can unlock that same value on the sidechain, where you can take advantage of different features on Liquid, where you can spend multiple transactions that way off the chain before you eventually want to peg out back to the Bitcoin main chain. And the features that Liquid has that may make it a good use for having your Bitcoin locked up is that you have confidential transactions where the asset types and amounts are not visible to anyone that doesn't have the blinding keys to that transaction, which is normally the sender and receiver. But if you were to share it with someone else, you could prove that the transaction was sent or received with a certain amount and type of asset. Liquid also has 1 minute block times as opposed to 10 minutes. And it's not a mining process like Bitcoin, because you already have this trusted federation of signers. That same set just produces one new block every minute. And if it's signed by 11 out of 15 of those functioning operators, the block is successful, and it's sent out on the network for anyone who's running elements to also verify the Liquid chain. Now, hey, besides that, another beneficial feature of Liquid is that you can issue new assets as opposed to Bitcoin, where you can only have Bitcoin. I know there's a number of proposals and ways that people do have new assets on Bitcoin. I sort of believe it's not the right place to be doing those things, and Liquid is purpose-built to be able to issue your own assets and manage them in a Bitcoin-related way, but not spamming the Bitcoin chain. So you may know the stablecoin USD Tether, and there's a number of other stablecoins, as well as equities and securities that are also issued on Liquid. And like I mentioned previously, promissory notes from the Mifil Bank in Mexico, $1.8 billion worth of promissory notes are on Liquid, being used by Mexican people every day. So that's how Bitcoin is. I mean, Liquid is good for scaling, because we're taking a lot of those transactions off of the main chain, removing some of the spam, and giving people another place to issue their assets. Liquid also has much lower fees than the Bitcoin main chain. The Bitcoin chain it's obviously an auction for block space, and when you have periods of very high transactions, people will pay higher fee rates. And on Liquid, there's much more regular blocks. They're every minute, deterministically, and so there's less of a fight for block space because they are more regular. And on top of that, on Liquid, the minimum fee rate is also 10 times lower than on Bitcoin. So instead of paying a minimum fee rate of 1 sat per VByte, you can start from 0.1 sats per VByte. And on top of that, the Liquid Federation just rolled out a new upgrade which reduces the cost of fees of confidential transactions to an even lower rate than they previously were. Because on Liquid you have these confidential transactions, it makes them larger than Bitcoin transactions, which means that even though you're starting from a lower fee rate, you're still paying similar fees on Liquid. And now with this new discount being live, you are no longer paying a penalty, so to speak, for having these confidential transactions, which we believe is very good for privacy. And by making it cheaper and more convenient for people, they are more likely to use confidential transactions, which are the default on Liquid. I mentioned the faster block times, and it's also good for Bitcoin scaling in that it's easier to upgrade. Because you may say that, okay, blockchain scaling doesn't really work, and so how can another blockchain scale Bitcoin? Firstly, it's separate, and so you at least sort of double your capacity from the base chain. Besides that, any upgrades that are actually a hard fork, like increasing the block size or reducing the size of transactions, is much easier to coordinate and deploy on the sidechain network like Liquid, because you don't need global consensus to change Bitcoin. So in my opinion, that is why Liquid is good for Bitcoin scaling. It gives us a path to be able to test those kind of upgrades before they should really be necessary on Bitcoin. Liquid is also good for Bitcoin developers. developers benefit from the code that's based on Bitcoin, and it has a secure and reliable production implementation in Liquid. I mentioned, these functionary operators. They are running a copy of Bitcoin Core, and they're also running a copy of Elements. Elements is a software fork of Bitcoin Core, so it's the same software, but it's got additional features, which are these confidential assets and this ability to issue new assets. This fork of the software is maintained and updated every year, and so it gives additional eyes on the Bitcoin code, and it also helps to submit improvements back upstream to the Bitcoin software. So it's a mutually beneficial relationship there. Besides that, developers can also benefit from additional opcodes that are available in Liquid's scripting language, which is based on Bitcoin Core, but it has a number of opcodes that are in discussions that Bitcoin developers want to be re-enabled on the Bitcoin chain, and they're finding it difficult to find a consensus on which set of opcodes should be re-enabled. So Liquid has already re-enabled cat in a safe way, and a number of introspection opcodes and check sig from stack, which is a way to verify signatures that are in your scripting stack without it just being the signature of the transaction. So this, in effect, gives you a way to do covenants on Liquid, which is a large part of the discussion about consensus on Bitcoin in what should we be enabling next. This gives developers a way to actually use some of these advanced scripting capabilities on a production chain like Liquid to prove out their concepts. If you believe that you want opcode XYZ enabled, it would be much easier to get it deployed onto Liquid and prove out your concept on Liquid backed by real Bitcoin than it is to get the entire Bitcoin consensus network to change when nobody can agree on what should come next for Bitcoin consensus. So there's all kinds of fights between all the Covenant guys and the cat guys, and So this is why I believe Liquid is good for Bitcoin developers. It gives them an avenue to prove out their concepts that is not a test net. And I know that the ARC guys are working on scaling Bitcoin as well, and they are using Liquid partly for one of their implementations to prove that they've got product market fit. Liquid is also good for Bitcoin cryptography. So I mentioned that Elements is a fork. We also use a fork of the underlying cryptographic library that Bitcoin uses, which has additional cryptographic primitives. You can see that string of text up there, libsecp 256k1-zkp. ZKP means zero knowledge proofs, and these kind of primitives are used in Elements for the confidential transactions, confidential assets nature of Liquid. So there's Peterson commitments, and there's range proofs, and a bunch of stuff that exists in this library that's not in the core cryptography library for Bitcoin, but it also gives a path for any new cryptography to also be proven out before being added to the Bitcoin libsecp library. And one example of this is MUSIC2, which is a novel signing scheme. It's a 2-round multi-signature signing scheme, and it started in the ZKP library, and after being battle tested and reviewed by all of these excellent cryptographers, it has now made it into libsecp, which means it's in Bitcoin, and MUSIC2 is available there now. So that's why Liquid is good for Bitcoin cryptography. Liquid is also good for Bitcoin businesses. I think I've been talking for too long. Businesses can benefit from Liquid because it's low cost and it's reliable, and it can be used with or without Lightning. So it's extremely valuable that you can swap between Lightning and Liquid with a provider like Boltz or PeerSwap. PeerSwap is a self-custodial thing you can run with your Liquid instance, and you can swap with a peer your channel balances and capacities in a much cheaper way without touching the Bitcoin chain. So it's been extremely useful for Lightning node runners. And it's very easy to send and receive Liquid Bitcoin because it works just like Bitcoin. It's got addresses, UTXOs, It inherits all of those things from Bitcoin. So people that already know Bitcoin can pick Liquid up quite easily. It also has stablecoin support, so if you need Tether or there's a Euro stablecoin, there's a Canadian stablecoin, you can use all of those on Liquid. Your business could accept them, you could send them to other providers, and it's quite easy to integrate because it inherits all of these things from Bitcoin. So if businesses already have some kind of Bitcoin integration, it's very easy to also integrate Liquid. And lastly, Bitcoin Liquid is good for Bitcoin finance, as a settlement network allows issuers and investors to custody and exchange the digital assets with stronger privacy guarantees, and there is optional compliance for those jurisdictions that have securities that need jurisdictional oversight and regulation. So Liquid has asset issuance. As I mentioned, Tether issued a bunch of stablecoins on Liquid, and besides that, you or I could issue our own shitcoins on Liquid. Nobody will use it. The thing about asset issuance, you need to trust the issuer. So if you trust Tether enough to redeem your coins from them for dollars, they seem to be doing quite well. And when it comes to asset issuance, it's all about who is the issuer. As I mentioned, Mifil in Mexico issuing promissory notes. Those are in wide circulation and being used there. Now, investors also get access to a broad range of investments on the Liquid network. There are tokenized securities like MSTR, which is available on Liquid. You could invest in that. There is the Blockstream mining note, which is tokenized Bitcoin mining in a way. It sounds crazy, but initially you buy the token, and once that 4-year period has resolved, all of the Bitcoin that was mined by the capital allocators and the miners is then available to be paid out to the owners of those tokens when it comes to an end. And I believe there was at least 70% return on investment above the initial investment of the first Blockstream mining note. BMN2 is also available now. And Liquid's also good for Bitcoin finance because it's confidential, so your trades can't be front-run, the asset types and amounts are hidden, unless you provide those blinding keys to whichever auditor you want to. Then they can see the contents of the transaction, what asset was sent, what amounts were they, and so it gives you this way of providing transparency when it's needed, but by default it's confidential. And the last thing, as I mentioned, for securities that have regulatory requirements, there's also Blockstream's asset management platform, which allows those entities to issue their securities and have a way of authorizing which participants use and transfer those assets. But that's only for securities in regulated markets, and it's just an optional thing when it's necessary for those asset issuers. So yeah, that was my time. I think I spoke way over time, but those are all the reasons why I believe Liquid is good for Bitcoin. And I'm very happy for anyone, if you want to come chat to me or ask me questions, or I'm around here, and thank you very much. Yeah, sure.
So for the average Bitcoin user, under what conditions or in what way would Liquid be preferable over Lightning?
Yes, absolutely. So the question was, how is Liquid beneficial to the average Bitcoin user, and how could you use it, or when would you use it over Lightning or the main chain? There's a couple of use cases that I like. Personally, if you've been receiving Lightning and your channel is full, it's pretty easy to swap some of that into Liquid, and you then have available capacity then in your Lightning channel. So it helps for channel rebalancing, and you could then save that money on Liquid until it gets to a certain amount where you're not happy to have it custodied by the Federation anymore, and you could then either swap or peg out to actual Bitcoin main chain, or you could leave it at, I see it between between Lightning and between the Bitcoin chain. You can use Liquid as the staging ground with lower fees than the Bitcoin main chain. So that's one use case, sort of stacking sats until they're big enough to go to the main chain, because you don't really want to pay fees for UTXOs that are going to be quite small. You could save them up there and either spend them via Lightning when you need to by swapping into Lightning, or swapping into the main chain if it's going to your cold storage or something like that. So it's pretty good for medium amounts. And there's another use case I'm not thinking of. You know, the Lightning one is honestly one of the biggest ones, how it works as a complement to Lightning when you need to rebalance channels. No, Liquid is complementary to Lightning. There's an initiative actually to have Lightning also running on top of Liquid nodes. So what you would then have, you know, the Lightning network is a peer-to-peer network on top of Bitcoin. Now, Lightning on Liquid would combine those two networks. So you would have Lightning node operators that are running Liquid and Bitcoin, so that your Lightning path could make it from Liquid through to Bitcoin without any swaps along the way, actually. What the nodes on the edge of that network would have both Bitcoin Lightning channels, and they would have Liquid Lightning channels as well. And it enables a greater routing of payments through both networks. So it's not a competitor to Lightning at all. You know, Blockstream would not work on two things at the same time that are competitors. It doesn't really make much sense. So they're complementary, and we've especially seen that with when fees were high after inscriptions and ordinals and all this stuff. That's when Liquid sort of more took off as, oh, I can swap my Lightning channels on Liquid and pay really low fees instead of having to pay Bitcoin fees for updating my channel states or getting closed and stuff like that. Yeah.
So, what's the deal? I mean, is it more of a design decision nowadays rather than a technical problem of having peg out being manual and peg in being automatic?
So they're actually both manual. And,
I thought peg in was automatic, so I can peg in even without any of the signing process.
yes, yeah, you could run. Right. So you can peg in trustlessly by running your own elements node, and so without any authorization. But it's just it's a stopgap security measure that it still needs to be authorized for pegging out. And I know it's just the way it is.
I mean, is there not some, I understand you have a lot of the asset management stuff under this other umbrella that says you basically can have this as an optional way. Is there not can you not just stack that up? You can have trustless peg in and peg out as a standard method, maybe option to have security. Because like, I don't, well, maybe I do know something Federation, but maybe I don't want to know any of these people. I just want to peg in and peg out, and that's then you.
Yeah.
Without any worries, and it's my security risk if I'm an idiot.
It's a good question. The truth is that, yes, it would be possible, but the Federation has decided on these measures because it's a last stopgap against security issues. If there was some critical vulnerability that allowed a bad actor to drain the Federation wallet, this peg out authorization mechanism is the. Yeah.
Actually have this, you can have some funds that are done this way and other funds that are actually just manually able to be pegged back out to Bitcoin. I think you get much more adoption.
Yeah.
You can play around with it, and no way you can trust 15 companies that are around somewhere.
Yeah, it's look.
15 companies are walls either.
No. There is a trust trade-off, and you could pick the 15 companies you dislike the most from that set and say, I don't trust them and I won't use it. And, you know, that's there for you. A lot of people do trust these companies, and historically, the reliability has shown that, you know, these things can, you will be able to peg out. I hear you, though. I would love it if there was no restriction to pegging out from Liquid. Yeah. Have it available. And again, yeah. Yeah, if you don't trust them, you don't use it, you know. Yeah, you don't know. Yeah. You could always swap out to Lightning. That doesn't require a peg out authorization. There's ways to do atomic swaps between whatever you need to. So you don't actually need. Yeah. So in that case, you need market makers. You need someone to provide that liquidity for your swap. But the thing is, Blockstream is just a technical provider. We can't tell the Federation what they should be doing for their peg out authorization. And to them, To them, the security afforded by that mechanism is worth the trade-off of not having trustless payouts. But again, you have trustless swaps.
I don't know, this is convoluted to go around this. You can't do it then, it's just like into the...
I hear you. I hear you. Yeah. Yes.
Yeah, just a very basic question. So if you use something like an Aqua wallet,
Yeah.
and you have your, it's non-custodial, so you have your code, you put one Bitcoin in it, it's in BTC. You can then swap it to LBTC. Let's say zero point 0.5. We put 0.5 in LBTC and 0.5 in BTC. If Aqua disappears, okay, and I have the seed phrase,
Yes.
and I restore it on a like Blue Wallet,
Yes.
but I only see the 0.5 that was in the BTC, or I'm not going to see the LBTC.
On a Bitcoin wallet, you would see what was still in Bitcoin. On a liquid wallet, you would be able to recover what was on the liquid network. So you could use SideSwap or Marina, or there's a number of liquid wallets that you could use to recover that in the same way.
But I could use the same seed phrase.
Yes, the same seed phrase.
That's what I didn't know.
Yes, one backup. Yeah. So wallets that support both will use the same seed phrase, and then they have a different account for the different networks. And Liquid also has additional stuff with blinding keys, but it doesn't matter. It's the same seed phrase. And if the wallet supports the same derivation stuff, you can recover your funds. Yes. You will still be able to recover it because all of those coins that exist on the Liquid network are controlled by the same private keys. Yes. Yeah. Yeah.
I've been picking up the groups and stuff that Liquid can help me with disguising and KYC.
Yes, it could. I'm not allowed to tell you how to do those things, but the truth is the transactions are confidential. So if your Bitcoin is in Liquid and you send it to whomever on Liquid, yourself, whoever, you can't track those transactions. You could see which address sent to which address. You can't see what asset or amount it was.
So if you move the KYC purchase Bitcoin into Liquid, send it to another wallet, it's untraceable from the...
I take the fifth.
Here's that proposal to get confidential. Did you guys put a lot of effort into getting confidential transactions onto this network and all the research? And like, why is there no official bit for confidential transactions with developers?
For Bitcoin? It's a hard fork. I mean, okay, presumably you could do it as a soft fork with new output types, but how do old nodes accept those transactions? Or, you know, it's at the very least a soft fork, and so part of that is, will you get consensus? Because a big part of people's... We could try. I think a lot of people like the transparent nature of Bitcoin because they can then they fully audit it. There is some level of trust in the cryptography that there's no inflation in those confidential coins.
The thing is that I have this issue with Monero because they've blinded the total supply limit. But if you don't blind the supply limit, we won't have an inflation issue. You always count the total issued Bitcoin on the chain, which is not really the issue. But if you can blind the transactions, it's like 95% of the privacy that it requires. You don't have to blind the entire amount of the entire chain, but you can blind the two transactions.
Yeah. So.
As much privacy is required without still guaranteeing there's no inflation problem.
Personally, I would love that, but I think you need Bitcoin consensus to do that, and they can't even decide to re-enable CAT. So I mean, I don't know how you're going to sell extension blocks or privacy. I think it's a big change to say this system has these confidential transactions, but we want them on Bitcoin. You got to convince a lot of people. What was that? Whirlpool. Okay.
Basic privacy.
Yeah. CoinJoin just required a coordinator. It didn't require changes to Bitcoin consensus. Yeah.